So what an interesting two sessions of trade we've witnessed Thursday through Friday. A very strong reversal began to set up during Thursday's session. It was looking quite like a bloodbath at one point. However, the dip buyers showed back on up at support. We closed relatively strong on Thursday. And then during today's session on Friday, we really started to see the pushing off from support and the relatively strong upward advance. On Friday, we closed up 332 points on the Dow Jones Industrial Average. To me, this looks like a reversal. Is this going to be the last reversal off from the support area? There is a very good chance that is going to be proven true. If, of course, we can get above this little swing high, which was really the last couple of periods of trade in the month of April, but more importantly, above this little swing high, which we established really through, I guess, the midpoint of April too. So they are essentially our first two targets on what appears to be that of a macro, or at least an intermediate bounce off from the support area. This is what I believe to be that of an intermediate correction within the larger predominantly bullish macro uptrend that we have been since 2009. And I'm quite excited for this. We are positioned very nicely for this move. It has taken a little bit of time. There has been a little bit of uncertainty around this pivot. But, however, the markets themselves are respecting those very important support areas. In fact, if you pay attention to the industrial average on Thursday and also on Friday, we essentially tagged that rising 200 simple moving average once again on the industrial average. Pay attention to this. We pushed below it on Thursday. We couldn't close below it, and we accelerated away from it on Friday. So this is looking quite good. This is the S&P 500, a very similar type of picture. However, when I go to the NASDAQ, this is where it gets a little bit different. What you'll notice, of course, is that we didn't actually tag that rising 200 simple moving average. However, what we did on Thursday was essentially close the gap that had set up from about a week and a half ago. This was Wednesday, now 2 weeks ago, and the change on Thursday. When we have these very small, petite little gaps, generally they will close. And that is exactly what happened on Thursday as we saw the Dow and the S&P 500 pull on back down. Now, as at the close on Thursday, I put out a video. Its title was Hammers, Hammers, Hammers. And we spoke about that long lower wick and how generally that is a very good reversal signal at support. It is otherwise known as a hammer, hence, of course, the YouTube update. So we are sitting here as at the weekend, fairly confident for the week upcoming. Again, this has taken a little bit of time to shake out. I've actually just sat down and recorded that analysis class in Pro. If you'd like to join, I would encourage you to do so. I also found something quite interesting when I was taking a look at the Russell 2000 in terms of targets moving forward. It really stems from a pattern that we currently find ourselves in, and then an extension to the upside, which I shared with people during that recording. It took me by surprise. It is a candid recording, but the people in that class, I think, are going to be in for a little bit of a shock moving forward. A good shock, of course, but it really sort of clearly defines where I believe this market is heading to moving forward. So having said that, I can go through a few other pieces of analysis. I mean, as we are seeing this sort of long day Morobosu candlestick with the Dow Jones Industrial Average, you can see also that these oscillators are starting to turn up. Take note where they're doing so. The stochastics never registered back into oversold conditions. That in and of itself is a sign of strength. You've got the RSI turning up. The MACD is trying to turn up. But this is where the picture begins to change. On the NASDAQ, the MACD is already flipped bullish, and we're starting to accelerate away from that histogram line. The RSI is holding up at the 50 point, and the stochastics also is holding and also turning up at the 50 point too. So when you see this take place, especially on market indices, it is a very strong sign that prices are going to rise moving forward. We were not able to push on back down into oversold conditions. And again, this is a sign of strength, not to mention this uptick on the MACD. So very important. I'm just pointing out a couple of things that have caught my attention over the past two sessions after this sort of reversal has taken place. The Bollinger Bands, let me take you into the S&P 500. You see how we pushed outside the band and now we're beginning to push away from that lower band? That is a Bollinger Band reversal. However, it looks as though we are establishing that of a squeeze. But when I bring up the chart of the Dow Jones Industrial Average, you can see again, outside push. What happened? It failed. A very quick reversal. We more or less tagged that simple 18 simple moving average, which is essentially the midpoint of the high and the low of the Bollinger Band squeeze itself. But even when you take a look at this pattern, I mean, if you're just focusing on the triangle, you can see that here and here, it acted as resistance. We broke above it not too long ago. We've come on back down now, and we've tagged this resistance once as new support. And this is also sort of coinciding with the secondary back test of what has been that declining resistance area, not to mention the rising 200 simple moving average, and also this horizontal area of support that has been holding since very early on in the month of February. So again, position yourself wisely. I mean, what you should be focusing on at this particular point is the markets potentially, if they can break above this and this area, rallying all the way back up to 26,400, okay? That is roughly 2,200 points from where we closed on Friday. So there are some big profit potentials if you allow to sit with the trend. The trend on the macro time frame is still to the upside. We are not in that of a bear market. We do not have any confirmation signals that we're in a bear market, nor are we breaking any of these very important support areas. What is questionable and a little bit contentious is this correction from this point up here to where we currently find ourselves, is this done? I mean, has it flipped? Has it changed? Has it finally kicked what has been a relatively weak, okay, beginning to 2018, or really if you consider that of the late stage of January through to more or less where we found ourselves early on in this current week, has this correction that we have been in, is it over? It's a question I'm asking you right now. Is this over? If this correction is over, well, then it opens the door for this, and that is what we are positioned for. It doesn't have to play out this way, but we are giving ourselves every opportunity to take advantage of this swing. Now, what I'm not going to do in this class is recap gold. I'm not going to recap silver. I won't speak about the US dollar. We went through all of that in that analysis class just moments ago. It is recorded and it is up online. So I'm going to render this video now. I'm also going to say farewell to you for the week, which has been. I wish you a very nice and enjoyable weekend. If you want to learn more, have a look into that analysis class. If not, I will see you back in YouTube land, so to speak, for a couple of times next week as well to update you on a couple of individual stocks and also what the markets are doing as at the close. All right. All the best, everyone. It's James signing off on behalf of Pivot Point Trading. All the best. Farewell.